Fusion Mobile, quality e-learning experience on the go.
You are welcome to Fusion Mobile e-learning platform. I'm Olokobekwalim by name, the account tutor. I hope with creating the final account of a sales trader. After I'll be looking at the trading account, the profit and loss account, that is the income statement, balance sheet, which is the statement of financial position. Firstly, we have the trading account. So the trading account is prepared to determine the gross profit or the gross loss of the business organization, that is the business of the sole proprietor. So the trading account is prepared to determine the gross profit or the gross loss of the business organization. So how can we determine the gross profit? The gross profit is the excess of sales over cost of goods sold. The gross profit or the gross loss, and the gross profit is the excess of net sales over cost of goods sold. So let's look at what we mean by cost of goods sold and what we mean by the net sales. So okay, we are going to look at the trading account generally. So we have this. The first thing is for us to determine the opening stock, that is the stock of goods at the beginning of the accounting period. That is the stock of goods at hand. So we're going to have the opening stock, which let's assume is this. So the next thing is for us to have add our purchases to the opening stock. That is the cost of goods bought either by cash or on credit in the period. That is, the purchases will consist of goods bought by cash and on credit in the period. So we're going to add our purchase to that. So purchase. Okay, we can put this here. So the next thing is our carriage inward. Okay, the carriage inward is the cost of transporting the goods to the warehouse. That is the goods purchased. Whenever the goods are purchased, actually carriage inward, the carriage inward always incurred. That represents the cost of transportation. So that will be included in the cost of purchase. So we must add our carriage inward to this. Just thereafter, we can less our return outward. So the return outward represents those costs of goods or the goods that are previously purchased but are returned back to the supplier. Since the goods returned back to the supplier is no longer part of the purchases, so we have to deduct it from the purchases. So we have our return outward. Yeah. So after deducting that, we're going to have this. So we add that to the opening stock. So and that gives us cost of goods available for sales. So this is the cost of goods available for sales in the period. So the next thing, we can deduct our closing stock within the period. So after deducting the closing stock, what we are going to arrive at is going to be our cost of goods sold, which is the major aim we want to determine now. So this is how we can determine the cost of goods sold. So the first thing is for us to have our opening stock. Then we add purchase to it. Then we add the carriage inwards. Thereafter, we deduct the return outward. And for us to arrive at our cost of goods available for sales, thereafter we're going to less the closing stock to determine the cost of goods sold. So let's talk about the side. This side we have our sales here. We're going to be this. So in the period, we can have some return inward, that is goods that are previously sold to the customer but are returned back to the business. When goods are previously sold to the customer and customer return them back, that becomes sales return or return inward. So we're going to less return inward. Since it's not part of this word sales, we're going to less return inward. So we have this, and now we're going to be our net sales. So the difference between the net sales and cost of goods sold will be our gross profit. So if within a period the net sales is less than the what? The cost of goods sold, that will become our gross loss. So the extent of cost of goods sold over net sales, that will become the gross loss. So let's take an illustration on that. So we have an illustration on trading accounts. The following information has been extracted from the books of Akimbode Enterprises. So we have the sales 50,000, we have the opening stock 5,000, purchases 20,000, we have return outward 1,000, closing stock 2,500, then we have carriage inward, we have returning inwards, and also have wages. So let's prepare the trading account. So we have opening stock, going to be the first thing. We have opening stock, it's 5,000. So we can add purchase to it. So we had purchase, which is 20,000. So you can just take it straight up because there's no enough space, and just take it down. So we have carriage inward on this. Add carriage inward to it since we have the carriage inward. So we have 2,500. That gives us 27,500. So the next thing we have return outward. So we have to deduct return outward. So cost of goods returned back to the supplier within the period. So have to be deducted, which is 1,000. So we have to deduct that using the bracket. We have 26,500. So it's still the same thing. You can open another column here. So since there is no enough space, we can just do it straight. So same thing. So the next thing, after deducting the return outward, that gives us cost of goods available for sales. Cost of goods available for sales. No. Actually, we can have the cost of goods available for sales. Okay, cost of goods available for sales. Exactly. For sales, as cost of goods available for sales. Now, the next thing for us to list the closing stock. Closing stock in the period. The closing stock in the period is 2,500. So we have to less that. So now they give us 24,000. Give us 24,000. So we've less the closing stock. Although we don't have this in our format, but whenever you are giving the direct wages, so all of this with the direct costs. Although we don't have the wages in the format, but when giving the wages, that becomes a direct cost. So that has to be included in the cost of goods sold, and the cost of the goods sold in the period, because wages can also serve as the direct cost. That is costs incurred directly in the purchase of the goods. So that has to be taken as a direct cost. So it has to be included in the cost of goods sold. So in this, after deducting the closing stock, this should have been the cost of goods sold if there is no wages, if there is no direct wages in the period. But now we are giving direct wages, so that has to be added to this. So wages, so that is 10,000. So we have 34,000 there. That then be our cost of goods sold. So thereafter we can go to sales. So we have sales. the sales in the period is 50,000. And again, we have return inward, which is 2,500. So we are going to less that. Less returns in the period. Let's return inward in the period, which is 2,500. And they give us 47,500. So we have our net sales. That gives us the net sales on turnover. So the differences between the cost of goods sold and the net sales then give us our gross profits. So the differences now between it is that will be 13,500. So we have 47,500 as the balance. We have 47,500 as the balance. So I just do this. So 7,500 as the balance. So that is all about the what's trading account. So the purpose is to determine the gross profit, which is actually done, and the gross profit is the excess of the net sales over the cost of goods sold. And the cost of goods sold can be determined by adding the opening stock to the purchase. After we had the carriage inward, we deduct the return outward. Thereafter, we are going to arrive at about cost of goods available for sales. Thereafter, we let our closing stock to arrive at the cost of goods sold. And if there is direct wages, we have to add direct wages to it to determine the cost of goods sold. Thank you. So we have to move to the profit and loss account. That is the income statement. So the profit and loss account, that is the income statement. The purpose is to determine the net profit within the period. That is, we have to consider the indirect expenses which are used in the generation of profit within the period have to be deducted from the gross profit. And also we have to consider all of the indirect income within the period. That is the income received within the process of the period also have to be added to the gross profit in order for us to determine the net profit. So the profit and loss account will be in this way. So we are going to have our gross profit brought down right from the trading account. So we are going to have other income like discount received. So we're going to have interest received, commission can also be received in the period. It's possible. You can also have the rent received in the period. That is half of our income. Thereafter, we can have reduction in provision for bad debt, which we did under the provision and reserves. So that's about our income within the period. So the next thing, let's have as the income in trading account. So we can have the list of expenses in the period. List of expenses in the period. So we can have rents paid in the period. So we can have motor expenses. We can have insurance and expenses. So we can have advertisements, which are expenses within the period. We can have repairs. Then we can have sundry expenses. We can have rates. So we can have lighting and eating. That also serve as expenses. We can have carriage outward, which cost of transportation of goods to the customer warehouse. That's serve as expenses. and so on and so forth. So when all of the expenses have been added together and all of the income has been added together in the period, so the differences between the total income and the total expenses give us the net profit. So the net profit is the excess of the net income over expenses. So I'll give us the net profit. So we can then move this side as the net profit. So the profit and loss account of this form. So the list of all expenses and of all income, like the gross profit brought down. Then we have our discount received. So we have our rent received, the commission received, the reduction in provision for bad debts. So something like that. Let's move to the balance sheet. The balance sheet within a period. Balance sheet. The balance sheet in the period, which is a statement of financial position. The balance sheet is not an account. So balance sheet is to be prepared to show the financial position of the assets. So it is a list of the organization. So it is a list of all assets, that is the fixed assets and the current assets, and also the list of all liabilities within the period. So the balance sheet is used to show the financial position. What are the all assets owned by the owner of the business, and what are the part of the assets being owned by the outsiders of the business. So I said in the introductory class, we said the balance sheet is the tabular representation of the accounting equation. So in the balance sheet, we are going to have the asset, we are also going to have the liabilities. So the balance sheet will be as does. Do not forget, the balance sheet is not an account, but rather it is used to show the financial position of the organization. We use that to show the financial strengths of the organization, total assets owned by the business, and also the total asset, that is the claim of the asset of the asset, the claim of the asset on the asset of the organization. That is what the balance sheet shows. So when we have the balance sheet, which can also be called statement of financial position. So we're going to have the first thing in here. We can have our fixed assets. So we can have motor car. The fixed assets, just like we talked about it in the depreciation, they are those assets that are permanent in nature, and an organization can use them for more than one accounting period. So they include motor car. So what you have does have the amount. So that include furniture and fitting. That includes equipment. That includes also equipment. We have the furniture and fitting. We have motor car. We can also have premises. So we can have land and building. So the addition of all fixed assets will come this way. Now we can have our current assets. So this type of current asset is the opposite of fixed asset. They also form part of the assets of the organization. But these assets, you know, they are not permanent in nature. They fluctuate within an accounting period. So they can easily be converted to cash and any other form within a period. And this type of asset includes the stock of the organization, stock at close of the organization, which is going to have be this. So we have debtors within a period, money owned by the outsider to the organization within a period. We have this. So we also have we have the debtor, we have the stock, we have cash in hand in the period. So cash at the bank in the period. So you have the bill receivable. That serves also as an asset at as a current asset. So debtors is the amount receivable. So we also have prepayment, any form of prepaid income, prepaid expenses also falls here. So addition of everything give us this, so we can have our total in the balance sheet. So also in this side, this shows the what, this is the list of all assets, and in this side we have the overview of the capital and liability of the organization. So we have the capital. So for us to calculate the owner equity, so after we have the capital, we are going to add the net profit of the business within the period, because that is the part of the proprietor. The net profits made by the business represent the parts of the proprietor within the period. So we can add our net profit to it. So thereafter, we can deduct the drawings which serve as a denomination to the proprietor when less the drawing. So thereafter, we can have a long-term liability. Our long-term liability include loan. So we can have debentures now due to the fact that this is a sole trader. So we can have our current liability, and that includes creditor, that includes bank overdraft, that includes accruals, expenses accrued, any form of expenses accrued during the period. Okay, that includes bill payable. So addition of everything, we balance this, and the balance sheet will be equal within the period. So we have the fixed assets, the motor car, fixtures and fittings, equipment, premises, Nana building has the fixed assets. So the permanent asset within the period, we have the current assets, which is these debtors, cash in hand, cash at bank, bill receivable, then the payment, and that amount to that. We have the capital, the net profit to this. So we are going to less our drawings within the period to give us this. Then long-term liabilities. So we have the loan as the long-term liabilities. We have current liabilities, which includes the creditor, bank overdraft within the period, and we have the accruals, and we have the bill payable. So that gives us the overview of the balance sheet. So let's take an illustration on the topic. So we have an illustration. From the following trial balance of Ajayi, draw up a trading profit and loss account and the balance sheet for the year ended. Balance sheet for the year ended 31st December 1996. We have the capital, we have the stock, then carriage outward, carriage inward, and something like that. So the first thing is for us to prepare our trading accounts. Trading and then profit and loss account. Let's put it in a single file. So we have this. Let's put that in a single file. So we have the first thing is our opening stock. Let's pick out those items we need in our trading account. So we need our carriage inward, we need our return inward, we need sales, we need purchases, so we need return outward. So all this salary comes to the profit and loss account, profit and loss, balance sheets, okay, and the closing stock, which is this given here. So the first thing we have here, okay, we have return outward, salaries. So that means stock, we need stock also. We serve as the opening stock. So the first thing is the opening stock. and that is 2,368. So we have our purchase. Where's our purchase? We have our purchase here. Purchase. Let's use 2 columns this time around. So we have purchase. We have 11,874. So we have carriage inward. Since we have enough space. So carriage inward. Where's our carriage inward? Okay, TV10. And we can then add, we have 48121. Okay. We have return outward. Let's have a return outward. So have our return outward. Less that, which is TV22. So we can less that. We have 2, 6. Then we have 11. We have 8. We have 1, and then we have 1. So we can then add it to this. We have 0. We have 13. Then we have 2. We get half 4 and 1. So the next thing, this cost of goods available for sales. So the next thing is the closing stock. We are not having direct wages and salary. That can be direct wages. We don't have indirect wages. Okay. We've not used the carriage inward, the return. Okay. It's the closing stock. Less closing stock. X the value of closing stock, which is 3,000. So we thereafter have 11,230. This cost of goods sold. They become cost of goods sold. The next thing, we have our sales. Sales, which is 18,600. So next thing we have return inward. We have to less that. Cost of goods return back by the customer to the business. So return inwards, we have 205. We have to less that. And then give us 59381. That becomes our net sales. You can put brackets, we serve as deduction. So the next thing is our gross profits. There is excess of net sales over cost of goods sold. That will be gross profits. So the difference between that give us our gross profits. So we have 18,395 minus 11,230. That gives us 7,165. Which is our gross profit. 18,395. So we have 18,395. That's our gross profit. So we are done with the trading account. The next thing, we can move to the profit and loss account. So this column we can have it together. Gross profit brought down. It's a continuation. Can be carried down. That becomes 7,165. Now we have to identify our expenses within the period. So we have carriage outward as an expenses, salary and wages as an expenses, rent expenses, insurance expenses, only the expenses too, advertising is an expenses, general expenses. Do you have any other income that this can't receive? No. We don't have any other income apart from gross profit brought down. Okay. Bank creditors, drawings, that does not serve as an income. So we have carriage outward. We have carriage outward, which is 200 in a period. So we have salaries and wages in the period. Salary and wages, which is 386062 rather. Sorry. So we have rent, which is 304. So we have insurance, which is 7878. So thereafter we have sundry expenses, which is 664. So we have advertising, which is 216. Thereafter we have general expenses, we have 480. So first thing is for us to list our expenses. So we have the carriage outward, which is this 200. Then thereafter we have salary and wages, which is 3862, which is this. Next we have rent, which is 304, this. Then we have insurance, which is 78. Thereafter we have sundry expenses, which is 664. We have advertising, which is 261. So thereafter we have general expenses, which is 480. So we don't have any other income. The next thing is for us to what? Determine our net profit. Net profit is in the period. So net profit serves as the essence of what? Gross profit over total expenses. So we can add all the total expenses: 200, 3862 plus 304 plus 78 plus 664 plus 216 plus 480. Thereafter we have that give us 5,000. At 5,804. So the difference between the gross profit and that will give us our net profit, which you then have 7,165 minus the total expenses. That gives us 1,361. So then we can have the total balance. After we can have the total balance. So that is all about the aspects that is trading profit and loss account. The next thing is the balance sheet. Let's prepare the balance sheet. So we can do the balance sheet here. Okay, we've used the figure here, all of the figure here, but capital have not been used. Okay, the capital have not been used. So trying to rub this off, so we can rub this off. So now is to prepare the balance sheet. So we have the balance sheet. So these are fixed assets. And we can have our capital. So our capital is 22,636. So we can rub this off to have enough space, since we don't have anything we want to use here. So we have fixed assets. So our fixed assets is land and building, furniture and fitting, motor car. So debtors, bank, that becomes current asset. So we have land and building. So we have furniture and fitting. So thereafter we have motor car. So Land and building is 5,000. Furniture and fitting 1,800. So we have motor car, which is 350. So we can add, we have 0, 5, 1, then that will be 7. So the next thing is our current asset. So can they have, we have the debtor, we have the bank, debtors. Okay, actually let's start from the stock, closing stock. So we have the closing stock, which is 3,000 naira. Closing stock. Next thing we have the debtor, which is 3,896. So we have the bank, which is 10,486. So I think that is all about this. So we can then add. So we have 3,000, then we have 3,896 plus 10,486, and they give us 17,382. That gives us 17,382. Add this together to 17,150. To 7,150, that gives us 24,532. 4,532. Now we have our capital, 22,636. Okay. You can't go that way. Can't go that way. Okay. So guys, start the video.
I've started it.
Okay, so we can have the addition of this and this to give us total assets within a period. So the next thing, we have the capital. So our net profit added to it. So we have our net profit, which is 1,361. So we have 22,636 plus 1,361. So you have 23,997. So let's join within a period. So let's join within a period, which is this 1,200. So we're going to have 79722. So we don't have a long-term liabilities, but we do have liabilities. So current liabilities, which is the creditors. The creditors balance is 1,731. So the addition should have a balance, so must be equals to this. So we have 22,797 plus 1,731. Okay, where we have the addition of this 5,000 plus 1,800 plus 350, 1,750 plus 17,382. We have 532. Okay, we're going to add this 22,636. 636, then plus 1,361. That gives us minus 1,200, which is capital, which is drawing within the period. That gave us 972 plus creditors 1731. So now we have the addition of that gave us 24,528. Wow, we don't have a balance account, so there's an error somewhere. Okay, we have a net profit of 1,3621. Okay, wow, the bank, which is 10,486, actually it should have been 10,482. So because of that error, we're not going to have a balance account, so it should have been 2. So we're going to have now 3,000 plus 3,896 plus 10,482. So we are going to have 17,378. So plus 7,150. That gives us 24,228. So we have a balance account now since our figures are correctly entered. So this is about this final account of a sole trader. So preparing the journey profit and loss account. So to determine the net profits, preparing the balance sheets within the period to show the financial position of the organization. So the use of assets and current assets, the capital, then and also the liabilities of the business. So within the period. So if you're having problems as regards to the topics, do well to replay the video, and again you have some exercises for you to practice to attempt the question. Thank you.